Welcome to Speidel's California Minute. I'm your host, Catherine Zidane. This week we're covering key nonconformity issues to watch for on 2024 returns. You still have time to register for Speidel's federal and California tax update, but dates and locations are selling out. Be prepared for tax season with the best 8-hour update. You can get registered for live webinar and in-person seminar sessions at caltax.com. Anyone completing California tax returns will need to navigate California's nonconformity minefield. Nonconformity is generally due to two key factors. California has chosen not to follow specific areas of federal law, and other than certain areas dealing with retirement plans, S corporations, and filing status, California does not conform to any federal law passed after its specified conformity date, which is currently January 1st, 2015, unless a specific law conforming to the new federal law is enacted. California automatically conforms to federal retirement plan provisions, including required minimum distributions. But these automatic conformity rules do not extend to the deductibility of contributions. This means California does not currently conform to the Secure and Secure 2.0 Act's increased deductible IRA and qualified plan contribution limits. If California does not enact conforming legislation, taxpayers will only be able to claim deductions for the pre-Secure Act deductible contribution amounts on the California return. But lower deductible contributions now means higher basis in the accounts later. For individual returns, some key nonconformity issues include the following. California does not tax Social Security benefits or unemployment benefits. Alimony continues to be deductible by the payor and taxable by the recipient for California purposes. California has not conformed to the TCJA limits on mortgage interest deductions and the repeal of the deduction for home equity loans. Moving expenses are still deductible as an above-the-line expense for taxpayers subject to California tax after the move. California does not recognize HSAs, so HSA contributions are not deductible for California purposes. Other Schedule A deductions, including unreimbursed employee expenses and casualty losses, are still allowed on the California return. California only partially conforms to the Federal Disaster Tax Relief Act enacted in December. We have more information on this in the December 27, 2024 podcast. Domestic and foreign income taxes are not deductible on the California return, and California phases out itemized deductions based on 6% of federal AGI. For business tax returns, some key nonconformity issues are as follows. California does not conform to the federal bonus depreciation deduction. It limits the IRC Section 179 expense deduction to $25,000 and has not conformed to post-2024 depreciation changes. The excess business loss deduction is handled differently for California and federal purposes in several ways. California does not have a business interest deduction limitation. California allows IRC Section 174 research expenses to be currently expensed. Unlike federal law, taxpayers who receive employee retention credit refunds can, for California purposes, deduct the wages on which the credit was based. California net operating losses are suspended for the 2024 through 2026 tax years for taxpayers with income of $1 million or more, and we have more details on this in the December 22nd, 2024 podcast. For all other taxpayers, California's NOLs are not limited to 80% of the taxable income, and California does not allow a 2-year carryback for farming NOLs. The employer's deduction for meals provided for the convenience of the employer is not limited by California to 50% of expenses. Deductions for business-related entertainment are allowed for California. California imposes the AMT for corporations and does not allow an acceleration of AMT credits. And California does not allow a dividends received deduction. To stay up to date with California tax law changes, subscribe to Speidel's California Tax Letter. This monthly newsletter is written by California tax pros for California tax pros in plain English with helpful examples and charts. For subscription information, go to caltax.com and click Publications. That's all for this week. Join us next time for another episode of Speidel's California Minute.